Good afternoon, Quasar Markets Live. I am so happy to be here with my man Charlie, the disciple of Trend Moon from Prosper Trading Academy. Charlie, how are you doing this afternoon?
My man Howard, I am honored to be here. First and foremost, my Dips to Rips podcast host. We need to get that going again. And it's been a while, brother. I've missed you.
Absolutely, man. Miss you. We'll definitely get Dips to Rips back going now. I'm more out of the crypto side and into the regular markets these days, watching a lot of stuff. But I talked to you a couple of weeks ago because I noticed something that you brought up to me. You had mentioned what's going on with these micro pumpers, buddy. You guys trying to take our business in the crypto world as the leverage as they close down all the leverage sites across the globe. You guys are coming in with these things that are going up 100% in a day. It's crazy.
Yeah, it really was the new SEC rule where they kind of flipped from that T plus two to T plus one. So settlement happening overnight kind of changed the game. And, the micro caps, they've been dead for a good year and a half. Obviously there were some Discord groups that got shut down, etc. But they're back. I mean, they are back. I mean, we are seeing the movers, we're seeing the demand, and it's, if you time it properly, you look at it properly, you have the ability of capturing these huge pumpers, and obviously being cheap you can leverage. And that's kind of, it's made my job a lot busier, where I was just focusing on large caps. Now I have to kind of focus on both ends of the spectrum here, brother.
Yeah, I mean it is insane. These pumpers are coming sort of out of nowhere, and a couple of them multiple times. I was looking at ASST. That's
Yeah.
pumping today, but that's also pumped a few times in the past. So it looks like they're picking them out. It looks like the Wall Street bets. Is this where the retail? Is this where the apes went?
It certainly looks like there's been a lot more transition kind of in between, and it's almost as if it's like a give and go, and they just kind of go back and forth, and it's really like those gold medal ping pong matches in the Olympics, where it's really fast and furious on both sides. But today ASST, FFIE has been a really big pumper over the last few months. They're up 50% today after a big pullback. WISA. And this is funny because a lot of these names were never really notable. And then there were names that are very notable, most notably from like COVID or just pre COVID, that are starting to make a lot of noise. And, we've seen, for example, in the last month with all the monkeypox news, all the monkeypox plays start pumping up here, GOVX and EBS and etc. So sometimes, history tends to repeat itself in the stock market, and there's always some sort of catalyst that's going to be needed. But once that catalyst kind of takes place, if the retail, public has interest, especially with the design of these stocks being such a low flow and heavily, shorted interest types of names, the screaming moves to the upside is, just getting a lot more frequent. I'm loving every bit of it, Howard.
I know that that's your play. You are the man when it comes to those, and no one can ride momentum like you can and find it. Yeah, I'm amazed to see it because you look at that Faraday chart, the FFIE, and it looks like a crypto stock. It looks like what the memes did. So and it's almost like the same philosophy where someone's convincing someone, hey, it traded at 180 a year ago or 693. It can get back there.
Yeah,
And they get it going, and they get these groups together, and they talk it up, and you see the thing just move. I mean, look at that; it's explosive. That
yeah,
is right out of.
and you're right. The dynamics is as well. I also want to just throw caution in the wind. The one thing we have to remember about these, especially with these micro caps, is that if they pump before and they retrace back a tremendous amount, the the secondary, the third, fourth retries of these pumps, they tend to really get flattened out a little bit quicker
Absolutely.
because we call them bag holder shorts. This is where bag holders that are holding at, extremely peak pricing points are, looking to just dump at any second, whether it's with minimal profits, break even, or even a small loss. The problem with a lot of these, especially with traders that are new, is that people tend to, over leverage. And then what do? Well, if it starts going against them, they start DCAing. And then next thing they know, they have 95% cash allocation to a drowning pig, and as soon as it starts pumping, they start unloading. And it's not just one. We're talking about thousands of people that have been caught in this madness. And micro caps, they get a bad rap, but that's because people end up chasing and they get caught. And one of the things I'm always going to tell you folks, that old adage, buy low, sell high, it's really important to keep that in context with these micro cap names. People don't realize that some of these stocks that make $3-4 moves, from a percentage standpoint, historically, it's really hard to sustain that. So stocks up 200-300% in a few hours, how much more meat is going to be left on that bone? So instead of trying to chase after, the vapors of a move, man, sit back, look for value, look for, a key price level where, a lot of retail traders will be focusing on. And, more importantly, keep risk tight, because you never want to be in that situation where you're caught and you're over leveraged. And next thing you know, you're just dollar cost averaging, and then you're stuck. And it may be 6 months and maybe 2 years down the road, and God knows what could happen. These stocks, some of these have to come from the dead, sub $1, and some of these pumps, and maybe the audience doesn't know this, but some of these pumps are manufactured to bring the stock bid above $1 and to have it close above that price, just for compliancy rules. Because with NASDAQ, if you spend a certain amount of time under that $1 threshold, you're subjected to delisting off of the exchange. So, these companies will literally manufacture some sort of marketing. They'll hire firms to help, initiate an up move and try and get the stock up. And you just have to make sure that, this isn't a manufactured move. It's really rare that these sub $1 stocks or sub $5 stocks amount to anything in the long run. You're playing basically the same odds as going to your local convenience store and playing these scratch offs. Quite honestly.
Yeah, you hit on a few things there. The similarities that I have from the crypto days is, it was the Dogecoins, the Shibas, every time they would get an extra pump, the Elon pump on a Shiba or something, it was a smaller pump every time, and it lasted less. You get that law of
Yeah.
diminishing returns almost on it. So you have to be nimble. You have to be in front of the trade. Don't try to get on that tsunami when it's going, because it will crash down on you. You gotta ride that wave to start off with. And like you said, don't be afraid. Sometimes the trade is not to trade. Keep your hands out of the market for a
100%.
second and wait for the next one to come up, because like you said, there's 3 today that you and I have talked about alone. This isn't something
Yeah.
that's happening once every 6 months, like people might be thinking we're saying. This has happened 3 or 4 times a day across the market. I'm
Yeah.
seeing this every day. I just look at the U.S. market movers on our Quasar market widgets, and it leads me right to them right away. You can see it, and looking for the jump in volume. I mean, these things just pump up, and you want to be nimble. And then another thing that I learned from you at Prosper was really about having a plan. What is your plan? You're getting in
Yes.
now at this price. At what price are you going to take profits, start? And at what price are you going to start to say, you know what? I missed it. And, if you manage those, you stay in the game. If you don't, you crash out. And, you could talk to this, but how many day traders, what percentage do you think crash out that way? I think it's a tremendous amount.
Yeah, no, the thing with day trading is you can learn all the technicals and nuances, but experience is always going to be the best teacher. And ultimately, experience allows you to plan. Technicals allows you to have structure around that plan. And, people are always worried about missing out on the big move. But, that's the same thing. It's the same analogy. It's like going to the grocery store, buying a lottery ticket, and only thinking about what you're going to do with the money when you win. But what happens when you don't win? What's the fallout? What's the plan there? And, I always try and teach traders is same thing with you. There's a best case scenario, worst case scenario. And, you show me what trader has won 100% of the time. I will bet every single dollar that I have, my family has, and anybody else that's willing to give me money for this bet, that there's no trader out there that has been effectively in the markets for a certain period and have never dealt with the loss. It's the cost of business. You know this, I know this, and anything can happen. And so it's really important that we don't only just anticipate up, we don't only anticipate profits, that we are very aware that anytime we put the money in the markets, there is some semblance of risk, and we just need to make sure we know what to do in that case it doesn't work out in our favor.
Absolutely, and even a little step further than that is also portfolio management. If you've got 9 plays playing, they should not all be going long.
Yeah,
Because yeah, you're gonna have a day where you hit that home run. Don't get me wrong, but you're gonna have a lot more strikeouts in that type of situation.
100%, 100%. So, dude, it's good to see you, man. How
It's
has
good to see.
the crypto world been treating you?
Crypto world is a little is good though. What's going on is a lot of creation going on right now. Working with a couple of companies on some products that are looking, to sort of bridge. What we're seeing now is the bridge between crypto and TradFi coming together.
Ah,
We've gone from the fighting to where BlackRock's in the game and Goldman's in the game and JP Morgan's in the game. So now people, what you have is they're building out it's a race to build out ecosystems. So you see people that are doing some really interesting thing to try to, make banks better. I'm working with a couple of neo banks that are doing stuff. Some thing for some expats that are looking to how they bank. Banking outside of the U.S. is not easy. We take it really for granted here.
100%.
And
100%.
yeah, so some of the reasons that I got into blockchain and crypto in the first place are starting to play out. It's really fascinating. It's an exciting time. So I've been spending a lot of time doing that, working on some of those projects. What you're seeing is, also is what I've always said. Not everything needs a token, right? Um,
Yeah.
and although our former president Trump there is I saw coming out with his own actual token, a security token, but you know
Yeah,
th-
he's got to raise that campaign money, man.
yeah, well, the crypto crowd has proven one thing: they will vote on one issue. And it's funny to see because you have part of that crowd being like Mike Novogratz and
Yeah,
Scamachi, who are definitely right side guys from the past, and then you have the Dorseys of the world and the Brian Armstrongs who are the left leaning. And the bottom line is they're going to support who supports technology and crypto and decentralization. So that's been
certainly.
interesting to see how it's affected elections also. So for me, it's the reckoning is started to come. And it's still early in that game. And Steve and I were talking today about that with AI. You can see people starting to doubt, with the chips I talked with you earlier today, all
Yeah,
crashing down. Now everybody's like, oh, AI was overhyped. It's a bubble. It's never happening. It's like, guys, slow down. You don't understand. We're not even in the first inning of AI.
no,
Um,
yeah, we are literally just breaking the ground floor, so to speak. And, again, I don't know if or how long your listeners and viewers have been around, but I need to state that Howard is not only just the most knowledgeable person I know in the industry, he's also by far the best trader I've ever come across. So much so that I've actually stole one of Howard's indicators that he uses and now fully integrated into my trading, both for day trading and swing trading. And remember, I owe you a beer or five for that, brother.
Absolutely. Well, again, I use a lot of yours, as you know, too. It's great to get back with you. There's not a guy that has got down this game when it comes to how to use technology to their side and trading. And, I was always amazed you took it to another level at Prosper with the way you can work with screeners, the way you back test. Because that's not
Ham
what
and
most
egg,
people are
brother.
doing.
Ham and egg.
Yeah, that's not what most people are doing out there. And I had always been more of a thematic trader, based on what was my thesis on something. So when you combine those two, it made it pretty good. But, it definitely has been fun getting back together with you here today. And I'm glad that you're going to be a weekly contributor. And we're going to have to get the podcast back going here over the next few months.
And golf, man.
That's for
And
sure.
golf.
We got to get out and golf. Absolutely. Well, thank you very much for joining me today with Charlie Moon, the disciple of Trend from Prosper Trading Academy. We'll see you again at 3 o'clock today when I go through the closing hours with you. Thanks for joining us.
Howard, you're the man.